evening and welcome to the Australian Stock Market Show. We do hope you've had a great week and are staying safe. Malcolm X once said that education is the passport to the future, for tomorrow belongs to those who are prepared for it today. So sit back and prepare yourself to come along on the journey with us tonight. We aim to educate and inform you on all things stock market so that you can enhance your future. Again, we have a big show planned as we'll cover many interesting stocks including Appen, A2 Milk, Tyro Payments, Oil Search, ResMed, Treasury Wines Estates and more. We will also answer your questions as we bring you our upfront no BS approach to all things stock market. Our main topic for tonight is Top 20 Growth Stocks for 2021. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. How was that for I'm back?
I know, I'm super glad you came back. Last week was terrible without you.
Oh, yeah, you had lots of emails too, heaps, didn't you, last week to get through?
I had a load of emails, and then I had to try and get my head around those, and then I had the main topic, which you did up.
Yeah.
And I'm trying to remember what you told me on the phone with your croaky voice.
Oh, lovely.
And I'm going, I have no idea what I'm supposed to say here, but I'll just say what I think.
Yeah, I lost my voice. That's tragic, isn't it?
No.
Yeah. Well, no voice, and my ears were blocked, and I had my hernia popped during this whole thing. I just bent down to pick something off the floor and felt my innards come out. Oh, it's a terrible thing. I don't want to go
I don't think we need to discuss that, but I'm sure your husband was happy that you couldn't talk.
Yeah,
Must have been real happy about it, but don't get sick again. You're not allowed to. It's just talk. I know I talk too much, but talking an hour without a break.
I don't get sick. It's called unwell. I just ran myself into the ground, and then I had one thing after another going wrong.
Well, you know what happens when you keep running yourself into the ground, you end up in the ground. So back off.
Yes.
Cool. Well, last week I mentioned that whilst times change, people don't, and that I'd been reading in various places that some are thinking that things are different now than they have been when it comes to profiting from the market, which, as I discussed, is not true. And I got a fair amount of feedback from you thanking me for my upfront comments last week, or in last week's show. So thank you for the support. As I mentioned, every week, every month, every year, we see exactly the same mistakes occurring over and over again. And only the names on the emails change, not the mistakes. Yesterday, I recorded a Talking Wealth educational piece for our show on flicks.net, and it was on some quotes or Buffett quotes and relating them to being a trader. And again, it hit me that so many people do not even follow the wise words of Buffett, and in doing so make avoidable mistakes that cost them dearly. Now, everyone really does need to come to a point where they say enough is enough of what they've been doing, and then decide that now I need to do it the right way. If that's you, then just keep watching, subscribe to the channel, and think about chatting to our team so we can share with you the right way to invest and trade in the market.
Now, moving on, it is the third Tuesday in the month, and this means we look at the world markets. So let's get into the charts.
Okay, on your screen right now is a watch list showing the world markets. Do you want to talk about it? Because I talk about this all the time.
Look, you're saying you get bored.
Yeah.
You can never get bored of the stock market.
I do this every week for Flicks.
Well, look, we could ask you to do it every day.
You could.
How do you feel about that?
No.
Okay, so looking at the list there, you can see the leaders board has changed so much. Oh my goodness, I've only been away for 1 week and it's just changed dramatically. India is up 0.13, leading the board occasionally.
And everything else is red.
Yeah. So look, New Zealand slightly behind that. You can see what's going on there with New Zealand. Do you like my little histogram on the right?
I love your little histogram.
It's just snuck out. I just clicked on it and it popped out for us. And we can see the Nasdaq 100 is actually down very slightly, but more or less flat. So we've got a number of markets that for the month are pretty much flat, and then the All Ords is down 0.33. But it's really a non-event until you get all the way down to the S&P 500, which is down almost 1% for the month.
For the month.
Yep, and we've got the Shanghai Composite Index down 1.45, Dow Jones Industrial Average down 1.57, the Nasdaq Composite Index down 1.58, and then we go through and we're looking at Europe. So I'm just going to jump through all the way down to the DAX, and we see minus 2.56, and the FTSE
Yeah, that's
minus
huge.
2.74. I mean, the FTSE's had a really rough run over the past few years, hasn't it? So whenever markets start to fall away, we like to have a look and just see how it's faring, but it's not doing too well this month relative to other big markets. So then we've got the CAC directly under that at minus 3.26, and the Asian markets.
Yep.
Down at the bottom, the Hang Seng Index minus 4.6% for the month. So it's very different, isn't it, to what we were seeing a few months ago. Let's go back and have a look now at the year and see what's going on.
It is hugely different. I mean, obviously you get everything green, but like we're saying, probably 2 months ago, we didn't think, or I didn't think specifically that the US market would finish the year any higher than what it was at that particular time, but it would need to come back first to do that.
Yeah.
But I think last week we saw Asia perform a lot better than the US. Europe didn't perform really pretty well, so the US is all in red. Europe was in the red, but a lot of Asia was in the green. So Asia's holding up a little bit. I mean, not outside of China, because obviously the Shanghai is not doing too well, and also the Hang Seng's not doing too well, as we saw there. But a lot of the rest of Asia is not doing too bad at the moment.
So look, I mean, when we look at the year, we can see that the S&P 500 is still leading, 13% up for the year. The Nasdaq 100, 12.3, and as we come down, the ASX 200's up 10.6 so far. Further down, as you said, the Asian markets are at the bottom, so only up slightly, say 1.2, 1.5%.
And that's just over halfway through the year, and our market traditionally will do 10 to 20%, 60% of the time.
Right.
So in that sort of bracket, around 60% of the time, we'll do between 10 and 20% gain. So we're right on normal at the moment. Actually, probably ahead of normal.
Well, I think it's going to come back. So people are going to be looking at it. It depends when you look at it, how the market looks, because you could look at it next week and then it's not going to be at this level, right, if the market continues to fall. And we're seeing some of the big stocks on our market just easing off a bit at the moment.
And I think the whole world is seeing that at the moment, and that's what I was saying on my report yesterday for Flicks. I was saying it's like there's a lot of indecision in the marketplace at the moment. Nobody's super positive about economies.
I think Australia's really well placed, and we've seen historically how when the US does drop, our market falls around half of that, or a lot less than that. So I think because our market was not the leader, and previously the US market was the leader, it's going to actually lag, and we're probably going to shoot ahead at some point, as we've been expecting.
Cool.
Okay, let's move on. This is all from us about major world markets. Now it's time for our first email question for the night, which is from Jazz.
Yes, Jazz sent in an email last week on the show, and I said I would cover Appen or APX. Now, however, we simply just ran out of time as we had so many emails last week. Now, Jazz, whilst you've had to wait a week, we thank you for your patience, firstly. And secondly, Janine is here now, so the answer to your question can only be enhanced with her here. So now when I get to your question, Jazz says, "Hi Dale, thanks for providing a weekly free education and quality analysis on the market. Can you please have a look at your favourite stock, Appen, and give your analysis on where it's heading in the next year or so? The stock has a downward run more than 100% in a few months, whilst fundamentals does not look as bad. Many thanks, Jazz." How does a stock run down 100% in a month?
I just want to know, how is it that it's your favourite stock? I thought WiseTech was your favourite stock.
That was my second question. It's not my favourite
I think he's
stock.
really smart in how he's worded that email.
He's sputtering me up, isn't he? He goes, he's not going to give me a hard time.
So you felt bad about not having done it last week to make sure it got in this week.
Well, you got some people on that.
You don't normally do that.
No, I don't. But some people go and think, if you mention Dale's book, you'll get him to answer your questions. We answer everybody's question, regardless of whether they've read our book or not. So it's like, or my book, whatever it is. Let's look at Appen. What do you think?
Okay, so looking at the chart there, it looks pretty bad, obviously, on the monthly chart, the fall that we've seen. So just to give you an idea about this decline that we've seen on the stock, it has been down around 70% from its all-time high, which is a big move, right? So if a stock falls around that sort of a level, often they can start moving back up again. So that's something interesting to observe. But it's still got to prove a lot. It looked like it was getting on its way. I'm just going to bring up this here so people can see.
I mean, it's halved in price this year. I think that's what he meant by falling 100%.
Yeah, so you can see that line across there. The stock's actually gone through that level there. and then it just fell away.
I was close to buying that actually myself. I know, and I saw that and I went, oh, I was really, really tempted myself. But looking at some other analysis that we teach our students, I went, no, I think I'll just hang back a little bit.
Yeah, well, you needed to wait for further confirmation because it's had such a big fall. It turned out to be a wise decision. So what do we think of it from here? Well, the risk right now is that because it's actually, I think it's trading below that level, is it?
So that
What's
is
the low there?
$12.15.
What's
so
the
last
low?
week it was $12.12.
Yeah, okay, so it's gone through that low. So the real risk, it needs to get above the high of last week's bar as a minimum, 13.62, and really strongly. Once it does that, then it should be on its way.
Correct.
But it needs to do that. Sometimes stocks can come down, take out those prior lows, and then all of a sudden reverse and go back up.
Yeah, it's interesting, isn't it? They have this sort of bearish-looking movement of them, but then they're actually turning to being bullish, and it could be some of those false. It's not like a false trigger.
Yeah, I know. And some people get triggered out of stocks because they've got stops too tight. But I mean, look, just as an idea, I was saying that if somebody did get in, say this week here, and they got tricked into it, there's only a really tight stop, 5.6 or 5.9% or something. Sorry, people can't see that there probably. Can I just drag it, or is that 15? It's probably 15.
It's 15, yeah.
So yeah, it would have been really close to an initial stop loss depending on what the level was set. And depending on the actual trigger that you set, because it's there are a number of triggers that can be set, as you know. So, but in this case, I think the stock really needs to get back above around 1367, 1370 really strongly to prove that it's going back up.
Yeah, I'd agree. I wasn't. The reason why I didn't get into it because I wasn't sure it had stopped falling yet.
Yeah.
Because it was, into my mind, there wasn't a real serious, strong reason why it had stopped falling at that point.
Yeah. Okay. So it didn't meet your trading plan rules.
It didn't meet my trading plan rules. So, as I said to Jazz, you're going to add a hell of a lot of value to the answer that I would have.
It's an interesting stock anyway to have on the watch list and keep watching if it actually suits your portfolio criteria. Because just remember, if you've got a portfolio and you're looking for big blue chip stocks, don't go messing it up by picking stocks that actually don't fit the criteria. So look, our next email is actually from Nick. Hi, Wealth Within team. I have a question about Treasury Wine Estates. I purchased the stock in early 2020 prior to talks of the company preparing or separating the Penfolds brand. However, I sold it later in the year after it triggered my stop loss. This was following changes to tariffs on exports to China. Looking at the chart, it looks to be on an upward trend over the past 12 weeks. Keen to hear your thoughts as to whether the outlook is looking stronger for 2021. Thank you as always for the insight you both provide. Nick, okay, good question. So
I think you did well exiting.
What do you think about it, TWE?
Oh, look, it is looking a hell of a lot better. It really is looking a lot better. I mean, if we look at the chart, I mean, you can see here with the COVID, big meltdown. Not the COVID meltdown, it's the tariff, what he was talking about with tariffs and things like that, but there's also... it just fell out of bed. So you're right to get out of it, mate, because you just really do not know how far it's going to fall. But you can see there it's really sort of just tracked sideways. But it's been rising for a lot more than 12 weeks. If we go back, we're talking about that's where the low is. That's November last year. So it's been going up for a lot longer than that. This is a nice, real good big rise through here. This 1, 2, 3, 4, 5, 6 weeks moving up through there. Breaking through there, so it does look like it's now starting to climb the stairs back to where it was. It really is one of those stocks that it does move. When it does move, you can see that it's quite volatile and always is sort of volatile. So you need to get in the right way.
Look, I guess I'd raise the point about where he purchased as well. So if can we just go and have a look at the date?
I can give you the map, the mouse.
So he's purchased in 2020, but we don't know when exactly.
He said before the tariffs happened.
Okay, in 2020. So that must have been here.
Let me read it.
So
I'm going to read his question again.
Yeah, because look, let's just assume that he's purchased somewhere around here. We don't know exactly when. So did he say he's in profit?
Early 2020, he bought it?
Yep, so that's back here, March 2020, February 2020.
So it's after COVID,
COVID's here.
Sorry, I did get it right, COVID. But the next part is the tariff bit.
Yeah, but the tariffs were coming in around that time as well. So that's the challenge for it here as well. August 2020, it got hit really hard. So it had another big fall down. And that second fall, let's have a look at that price range. That was around, what's that say, 30-odd percent, 40%? Yep.
Yep, it's about
there, 40%.
Pretty close.
So, I mean, you wouldn't think it could go much further, but stocks can always take out those long-term lows that you think it's a long-term low. But in this case, it's been making all the right moves. So even if it pulls back, which it could do because it's quite a volatile stock, it looks like long term that it's starting to move up, doesn't it?
Yeah, and that's what I'm saying. It's a little bit more steady than what it has been in the past. It's a nice sort of rise, very steady rise, even though it's quite volatile. I think he probably bought it at the wrong time, and that's one of them, but I'm glad he did sell it when he actually did do it, because it's kept him out of this for a while. But I do like the stock right now, and I think medium term it should do okay.
Okay.
Well, moving on is a question from Finn. So he says, "Hi Dale and Janine, would love to hear your technical analysis on Tyro Payments. It has solid fundamentals and has been trading in a nice range from the 31st of March up until now. I currently have a position in Tyro at $2.93 after the short sell attack was cleared up. I'm in a bit of a precarious position as I'm currently sitting on profit, but the stock is trading sideways in a range and will probably need to do so for a while to confirm where the stock is headed. Take profits now and enter back in later when there are some stronger signals. Your opinion would be greatly appreciated, Finn."
Very good question. Now, look at this. I mean, it's got very little history for us to work on. I mean, I've got nothing on the left-hand side, which is our monthly chart, and that's what we use to determine the big picture perspective on a stock. So only having about a year or so really doesn't help that. But in the short term, it doesn't look great at the moment in terms of how the stock's unfolding. However, a move, and I've just got rid of it there, but a move above this point here, probably what's April 2021, could indicate that it's more likely to keep going up. We've just got to bear in mind the fact that there's, potential resistance from all of those points there. So it's really about deciding whether this is the stock that you're going to take and whether, you've got your rules are met and the risk that you're willing to take when you set your stop loss. Yeah,
but I'm not sure. What I'm trying to get in my head is why, when it was bought, why it was bought.
I looked at the chart and I couldn't sort of see this, because I was looking at, okay, that wouldn't have been it because that was the COVID, otherwise he would have talked about COVID. But okay, there could have been a lot of shorting happening down here into this low in January 2021 and the stock's reversed. So when it was trading at 293 was around this time. So it was, you can see the prices that it covered met that. So it has to be somewhere around here. So it's almost like he's tried to catch the falling knife when he's bought it. That's what it looks like. Or he's just tried to get it just after it's bounced off that bottom, assuming that because the shorts he's observed have cleared, that would help the stock price, which it did for a time, but it doesn't mean that it's over, does it?
Yeah, and I think the interesting question is saying, should I sell now and buy back when it has better potential or perceived potential? And the thing is, it's almost like, well, six for one, half dozen.
Do you have any rules?
Correct.
What are you making your decisions based on to come to that question to us?
And to me, it looks like it's more of guesswork than rather some solid analysis on it. Well, this has got good fundamentals, but the technicals aren't saying it's strong.
Yeah.
It's not falling away yet, although this current week it's fallen lower than the rest.
Yeah.
That whole sideways move. So.
Yeah, the trend's changing, but it is now part of a sideways move, a short-term sideways move from, the May 2021 low and from this high here in April 2021. So it's still within that sort of range of coming across there, even though it's gone out slightly below. I guess it really needs to trade back above as a minimum, it's got to get back above that high of the 9th of July 2021 at 384 to have any hope of recovery. Yeah,
and I think you just need to have a good exit signal on it rather. You don't, and this is where Janine and I struggle all the time. We don't buy and sell unless we've got a rule to buy and sell. It's not just, we're thinking, let's just get out of it. We just don't do that, and we always have tested rules that tell us when to buy and when to sell, and that's why we struggle answering your question. Is like, well, it's up to you whether you sell it or you hold it. It's whatever you choose to do. All we're saying is make sure you've got a line in the sand of where you're going to exit from, and if you're going to hold, make sure you know why you're going to hold. So, to me, as I said, you need to make that decision. But thank you for sending in the question. Now it's time we get into tonight's topic, which is the top 20 growth stocks for 2021. Now, in our experience, it's not just traders that want growth from their stocks. A large majority of investors say they look for a growth strategy when establishing a portfolio of shares. So we plan to discuss a number of our preferred growth stocks, and particularly those we believe have the potential to perform well in the second half of 2021.
Firstly, we'd like you to think about your portfolio. If you already have one, and for those who don't, this information is great to prepare you for some of the things that you need to know when selecting stocks. Always consider what type of portfolio you want to run first and what your goal is. I wonder how many of you watching have actually done this. And if you have not, then you're not alone. We suggest that you take this opportunity to get on the right track now. Growth stocks can be found in all indices of the market, and some will be riskier than others, based largely on their liquidity, which really is about how easy can you buy and sell at a reasonable price when you want to trade. Now, this is incredibly important when the market pulls back and everyone is trying to sell. We believe that the ASX top 20 or ASX top 50 companies provide loads of opportunity for the savvy investor to find good growth and the great thing is that these stocks are generally more reliable in producing consistent growth when the market settles back into its longer term upward trend.
Yeah, the important point to remember is that if you are looking for good growth stocks for a growth portfolio, they can help you to build your nest egg for retirement, and also important in a strategy for generating income. And this is what we train people to do. Now, most think they need to buy stocks with a high dividend yield to generate income, which can lead you to the wrong stocks. Now, we talked about dividends a couple of weeks ago. Also remember, there are more ways to generate an income than just buying high dividend yielding stocks.
As well as discussing our preferred list of stocks in the top 20, we'll also share a very simple method of increasing your odds of finding stocks that are more likely to generate growth in the second half of 2021 and into the future, so that you can focus on your portfolio to ensure that you're purchasing the best quality growth stocks, particularly now, given how uncertain markets are around the world. In the second half of 2021, it will be increasingly important for buyers to focus on quality growth stocks and steer clear of more speculative companies. So let's get into the charts and take a look at a few of our preferred stocks in the top 20.
Okay, Janine, so let's have a look at what on the screen right now. You've got a watch list, yeah?
Yep.
Okay, so this is the top 20 stocks, is it? Mm-hmm. Okay, so what we need to do is look at this top 20 stocks. So what are we looking at here?
All right, so we've got so the top of the list, so this is obviously in alphabetical order, and you can see there that we've got Woodside at the bottom, okay? Now, that doesn't mean that I've said that ALL's the best and Woodside's the worst, it's just in alphabetical order. But we've got the growth that we've seen so far for the year. Now, we can see that ALL's up around 33, ANZ 20, APT's down 10.9, but it's interesting just to go back to the month as well and have a look at the change, the difference, what's going on right now, what's changing right now in terms of the stocks, and then having a look at a few of the stocks on the list that we think are good. So first of all, it's just a quick snapshot of some of the biggest, most liquid stocks on our market. Banks, it's always good to have, people think, okay, banks are just good for income, but that's true. Look what happened though. I mean, banks pulled back on their dividends, and there's talk about, this all changing, but I wouldn't necessarily rely on banks going forward that they're going to just splash the cash out coming forward. They might be much smarter to hang on to some of that money at the moment. But ANZ has actually announced a buyback, I believe. Okay,
because we were talking about whether they would do special dividends or something else because of all the cash they got sitting there from holding it in case they needed it.
Yeah.
With all COVID, so there's some special. So you're saying a buyback, which will support the price?
Now that's obviously a strategy on their behalf. I don't know whether it's been a bit of pressure from potential institutional investors or not, but I would like to think that some of the banks would see opportunities out there to grow and to move into other directions potentially. I think ANZ's a great bank, and it's actually one of the stocks that's on my list tonight, just giving you a sneak peek.
I know when people talked about I want to buy growth stocks, a lot of people don't even put the top 20 in their growth stock thinking.
No, they're thinking they've got to buy bottom picks, lower liquidity shares, which actually present more risk to them than what a lot of people can handle.
And we see constantly, and I know we saw this a lot last week, there was a lot of emails that I got from people buying CREP shares. Like they were just shares that we keep saying every week, don't buy this sort of stuff.
Creepy shares, did you say?
Yeah, CREP. Okay. No, not creepy, CREP shares. But they're buying them thinking that they're good growth stocks and they're going to get it. But I think the one word that you said earlier when we first started this topic was consistency. And you don't get in those type of shares. Where all these top 20, you do. You
more so, but not in all of them. It's just like you show in your book. And that's what I think is really it shone how how to beat the managed funds by 20%. We've looked at all of that, but over the years you've done spreadsheet after spreadsheet looking at different things on the banks and different top 20 shares. So we're going to show you a little bit about that tonight and what you can look for in this method that we're talking about. But you found that there are select shares, really good shares in the top 20 that just outperform. They have to, because if our market's going to go up long term, then it's going to be those shares that are going to drive it.
And that's what I was saying is most of the time when we see people's portfolios and they come to us and they go, oh, what is the one thing they complain about? They're inconsistent.
Yeah.
They're getting inconsistent returns. They have lots of little losses. They get an occasional win. It's because they're not going for the right stocks for their portfolio, and they're trying to go for growth stocks that are just not the right stocks.
Where they get 100% on one stock.
But the best people that we see and the best traders and best investors are always the one that go for the consistent returns and then keep compounding, and they end up with large portfolios with a lot less risk. So where are we going now with this?
Look, I mean, when I was looking at the list, you and I had talked about APT.
Yes.
And there is some risk in that area now because of
a lot of risk in that area.
The big tech companies in the US are coming out, and there's going to be much more competition now.
Google's going to be into it. Apple's going to be into it. I can guarantee the banks are looking at getting into it now because it's now not a concept market anymore. There's proof of concept now.
And you were saying to me today that the banks tend to sit back.
They do.
Wait for the market to establish itself, and then they'll come in. So, I mean, could APT be a takeover?
I don't think it would be at this point in time because of its price and because of where it sits in market capitalisation. But I think they'd be thinking about it. But the banks would be looking at it, and the banks are brilliant at doing this. They let everybody else do all the hard yards, do all the costs, sink all of the money into building these systems and doing all that sort of stuff, create the market, and then they come in and go, we'll pick the best out of that, and then we'll go and do it and shut everybody else down, pretty much. That's what they're good at, because we saw that in the financial services area where everything was vertical, and then we had the GFC, and then we had all the FOFA and all the other things that came out, the Royal Commission, and now they've all got rid of their wealth divisions, but they sucked up like a vacuum cleaner, sucked everything up. And they owned 80% of the money travelling through platforms the banks owned, pretty much. So they're really good at this. And right now I think they'll be looking at this space going, okay, who's the players? What can we take? So I think this space, whilst exciting, is also higher risk than other ones. So APT wouldn't be on my list of stocks to buy.
Well, look, I mean, it's been on my list because I just think it's been pulling back really nicely. It's not on my list for tonight, but it's been on my list because I just think, well, if it actually does pull back and then we get a good opportunity with a trend line plus a number of other rules, then, it may present an opportunity, but it is higher risk and it would need to tick lots of boxes along the way.
So we're going to look at some of your preferred stocks. So you've got 4 or 5 or 6 or 10 or 12 because
I guess
you can't
first
count?
let's just have
Okay.
Yeah, that's right. That's my excuse. That's what I tell you so I can get more on.
She's an analyst but can't count.
Okay. So we're looking at just quickly, let's scroll down this list here and we're looking at stocks like CSL and FMG. I've only got the codes in there tonight just to keep it short. GMG, that's Goodman Group, and Macquarie. So you'll recognise a lot of these codes. Some of you will anyway. Westpac's actually down 5% for the month at the moment. So the banks just had such a good run of being sold off. So that's what's happening on a monthly basis. And then we get back to the year for a minute. Set this up so we can see what the worst performers are, because often you talk about going for the worst performers in one year could outperform.
I think that's showing some good signs.
Coles looks good, but I see it as a great little plodding stock to underpin portfolios, but I just don't see it as a huge performer. Like unless they change something more significant in what they're doing, then I don't know.
CSL only up 0.62% for the year.
Oh, that's a stunning stock, isn't it, to have over time?
One of the best growth stocks you could ever have in your portfolio.
And even FMG, even all the mining ones, you could choose a selection of BHP, Rio and FMG. FMG can be higher risk at times, and you could get stopped out of it along the way. But Rio is has been looking good, and so is BHP. Macquarie historically is a good performer.
Very good performer too.
So that was really hard for me to knock Macquarie out of the list at the moment. And it's something that I would it's on our list, but it's just, I had to narrow it down. So I just chose a few that were a bit out of the park and in the mix there to make it more interesting. So,
all right, so hit me with them.
Okay, so let's go through. So ALL, right, not now.
Not now.
Right, because we believe it's coming back with the market. It's going to pull back.
So that's going to be short term and then push on for the end of the year.
So I think later on in the year, there'll be another really good opportunity for ALL, but not right now. But this is on the list, right? ANZ, the same thing. With the banks pulling back, we've just had this buyback. Often shares fall when there's a buyback during that time. And then we'll see how well it then gets taken back up again. But we think because there's so much money around at the moment, that the banks have to end up absorbing a lot of that. And with the way that the things have been going in the economy and what people are talking about at the moment, I think the money's just going to keep flowing back into these eventually. So, so we're expecting banks like ANZ to pull back. Probably ANZ could pull back in the order of around $24, I would say is reasonable. And then if we get a move out of that, that would be lovely, you know, looking
so
for
maybe another 10%, you're saying?
Roughly. Yeah, so it may be later in the year that we see this happen. It could be earlier. We just need to watch and let the stock tell us what's going to happen. So CSL,
look at that.
Another great stock. And look, you know, we always get excited by it, and at the moment it's doing some great things. So that's definitely one that's on the list, you know, so it's in there. And Rio, this week it's actually pulled back, and it has been quite volatile historically. And right now it is struggling a bit to get through this 130. Last week it actually closed up above it, so it looked really nice, like it was going to continue on, and then this week it got sold off. So I think that because it's finally pushed through its all-time high, and our market has, you know, because we've got that happening, and we believe that the market overall is going to continue to rise, we have to have the miners, the big miners going up.
I was talking about them yesterday in my market report yesterday, BHP, Rio and Fortescue, and how obviously last week they all jumped up because China, because the Chinese, their version of the Fed Reserve basically just said to the banks, you can have more money. Basically, you don't have to keep as much money in reserve. So the whole thinking was the Chinese economy would run harder, so therefore they'd want iron ore. So they ran a bit. And I'm saying, I thought Rio was my pick out of those three. It's the best one for this year with BHP. And Fortescue needed to break through that all-time high again to really push through, to really show me it was strong, because it is possible it could come back a little bit. So
yeah, so we just need to see. I think they'll all pick up and turn around and move back up again. We just may see a little bit of consolidation in the short term, but in the second half of 2021, I think we're going to see some good moves from the miners.
My guess was 20% on them.
Yeah, it's easy for them to make that sort of...
Yeah, easy. And if Fortescue did break those levels just above where it is right now, I was thinking that could even do 50%. Based on my thinking.
Now, Transurban, look, someone would say why? Why would you pick this? I mean, at times it can move sideways and then it goes into a really nice trend. And that's really the reason that I picked it, because if you look historically over the chart, if it does spend time going sideways, after a certain period of time, eventually it takes off again. So I actually like it. I think that if it heads back above this $15 mark, then it's continuing on its way.
Infrastructure, you'd think it'd do still continue to do well, wouldn't you?
Yeah, and it's trending up really nicely off this recent low here, which is really positive. So Transurban's another good one. We may see it come back in the short term if the rest of the market does have a pullback, and then...
Telstra's never been in the same sentence as a growth stock in my mind.
And I never thought that I would pick it. So it's number 6, right? But it's been a growth stock for this year. Look at it.
I should eat my words. I've never called it a growth stock ever.
No, you called it something like DOG.
I call it a dog stock for a long time.
You did. But I know that you've liked it. You said there would be opportunities at times, and look, I see this, and we were getting excited about it. I just think that from a growth perspective and the opportunities that Telstra has to really maximise its business, I think that the future's there with everybody working from home, and the technology and the gamers that are involved and how they can help people do different things. I think could be a good stock down the track.
All right, now Janine, I think you've got something special to share with everybody, don't you? All our viewers, don't you?
I thought
you're going to bring it up.
It's a secret.
Okay, so it's a secret. Well, would you like to explain what we're looking at? Because you've just changed what's on the screen, so now we've got a spreadsheet on the screen. So you tell us what you're talking about. Yeah.
Now, from time to time, you and I have a look at what's happened each year with particular stocks, don't we?
We do that.
And we just look at the performance and decide, well, what does that mean about the year ahead? What does last year's performance and the current year's performance mean? So I decided to pick ANZ, being one of the banks, because then you can relate it to the other banks as well. And anybody can do this. It's just a matter of taking the opening price and the closing price for the period, and then coming up with what the growth figure is, and then you've got a
Making
percentage.
the percentage, yes.
Now, these haven't been audited. This is not audited data. Okay.
I did the figures and you audited them for me.
Yeah, you created the spreadsheet and I've just added to the bottom of it. Okay, but it's an example, right? So it just illustrates a point. It's not about saying this is what ANZ's got. So if we just look down the list there, we can see that over time, you know, to start off with in the 80s, on the left-hand side here, it's like 84 start, we're going through the 90s. You can see there, it was quite volatile.
But the down years were like, it was only 2% one year, -9 and -3, and we've had 25 and 35 and 57%.
And then 9, but you would say that was low risk until you got this 46% decline in 1990, right, which is a bit out of character. But then the year after that, you get a 46% growth.
47%, yeah.
So this is a way to analyse a stock, to understand its personality from the big picture. Because remember, when we show you, each week when we show you the charts, we show you the monthly chart and we show you the weekly chart side by side. It's about having the bird's eye view first. But, you know, as someone who, you know, you may want to trade a stock, the first thing that people tend to do is go to daily charts, because that's what people in the industry have historically encouraged people to do, and that's where you can make big mistakes if you don't step back and look at what's happening from a bird's eye perspective. So in doing that and having that thinking and then just looking at the raw numbers, we can see here that in 1992, the stock then fell 37%. So it was up 1 year down the next. But it's been rare, like over time.
It's steady down a lot more lately, hasn't it?
Yeah, so it's much more steady. If you just look at the numbers, 20% in 2012, 28 in 2013. There was the 40 in the GFC in 2008 when everything was imploding. It went down 44% and then up 50% the following year.
Yeah.
So really, you've got to watch for those big years. Because they can then tell you what's going to be good the following year, and also be looking at what happens after that. So you get 2, you know, years that are okay, 50, then 2. That's neither here nor there. But this is not trading the stock in and out.
No,
This is just looking at what happened at the start of the period and the end. I can, you know, guarantee you, if you're looking in the financial year, you're going to get different figures again. So it may be worth cutting the data so that you can actually see it over those time frames as well. And that may give you some clues about, you know, when's the lower risk time to be holding ANZ. So looking down the list, we see 2012, 2013, 20%, 28%, and then a low negative. 13.43 is not huge risk, right? And then you've got 9 the following year, -6 in 2017 and 18. Now, we've had 1 year down at 9%, and this I haven't made red, but you can see there -7% in 2020.
It's overdue for a big year, isn't it?
So we've got only 1 year, right, 20%, which I'd be expecting another one
I'd
after
be
this.
expecting at least another one there, or a big, because it hasn't had a really big year for quite some time, has it?
Yeah, so that's 2021, okay, and look, we're expecting a short pullback before it moves up again. So who knows what this year could end up as, and then, you know, the following year we expect it to be good in 2022 as well.
And I think these figures here are really the most critical ones. It's had, out of 38 years, the last 38 years, 63% of the time it's positive.
Yeah.
So that means, you know, well, nearly 2 in 3, roughly 2 in 3 years, it's going to be positive growth. So you don't have a lot of downside risk. And obviously the highest growth 65 and the biggest loss is 46. So from those point of view, those two figures.
It shows don't buy and hold for a start.
Don't buy and hold.
You know, it doesn't make sense to do that when you can risk a significant amount every so often. But how often does that happen? You know, it's not that often that it does. It's just to understand the volatility of the share, and that over time you can make some really good money. But this is just more a method for you to start thinking, well, I should be looking at the data and see what the data tells me, rather than listening to reports necessarily on what other people's opinion is. We're not just giving you an opinion, we're giving you a tool, basically, as a really good starting point, in addition to looking at the charts.
Cool. So just wrapping up, we've just done all those 6 stocks. So they're all the ones are your pick. ANZ's probably your biggest pick at this point in time. Is that what you're telling us?
Look, I think, you know, I can't really say. I like ANZ and CSL at the moment.
I love CSL. I think I love them both.
Even over the medium to long term, they should be really good. And same with Telstra.
Cool.
But they all have to get through certain points, pull back, and then prove themselves before we then press the button.
Well, I think it's about time we got back into some more emails, because I see everybody champing at the bit to get an email.
Okay, awesome.
All right, now let's get into the next email from Tyan, who says, "Hi team, I'm a student of yours and I've been analysing oil searches. I think the stock looks interesting and there was an entry in November 2020 and has been going sideways since. However, I've noted the following: weekly volume during this period has been higher than pre-COVID. Now, the stock has previously followed the crude oil prices relatively well, although it does not seem to have followed the oil prices up the last quarter. Given the above analysis, do you think the stock will play catch-up? P.S. I'm fully prepared for Dale to tell me I'm wrong in my analysis. Love your directness on the show. Ha ha, Tyan."
Awesome.
Now, I did heavily edit this too.
Okay.
Because he had a lot of stuff that we talk about in our courses and a lot of analysis. So I just got rid of that and asked him to send an email through to our support team who will answer it properly for him. Well,
Yeah,
sorry, more
now-
fully than what we do.
I think it's Oil Search that has just been, there's a takeover announcement that came out that they,
Yeah.
you know, I think it was Santos that were involved as well.
Yep.
And I think Oil Search was on their list. So, and I believe that it got knocked back. Now, is it Oil Search that that announcement came out for? I haven't finished reading.
Boral had one that was knocking, but they knocked back. I think.
But look, I mean, regardless of that, if we're just talking about what the stock price is doing right now, it's holding up really well. Look at this volume here. It's curious. It's really curious, isn't it? This was in June. Really massive volume.
Because Tyan actually put, he overlaid the oil price on top of this. That's what he was talking about. So he showed me a chart that he'd actually done
really
with
smart.
overlaying the oil price. Yeah, and I think he's on module 4 of our course at the moment.
Look,
So I think
this is one of those great growth stocks, but it's really high risk in terms of trading this share. If you don't know what you're doing, you don't have a good set of rules with it.
Yeah.
And as you can see, it's just been really choppy. All of the oil-related stocks have done this in recent months. They've just traded sideways: Santos, Woodside, and Oil Search.
So is it going to play catch-up? That's what Tyan's asking.
Is it going to play catch-up? Well, look, the oil price has been just tracking sideways. It's almost making a mirror of that, but just a bit more volatile because of the nature of the share. So I think he's really wise in doing what he's doing, but I'm not going to make any statement about what it's going to do until it goes through this high, this 428.
Well, energy costs have been going up around the world, especially in the US. So it's pushing their inflation rates and stuff like that. So obviously, oil searching is in oil. Obviously, energy is oil prices. What do you think the oil price is going to do?
Look, I've just been watching it really closely. I'm waiting to see what happens at the end of the week because of this sideways activity that we've seen in the oil price. And once that move happens, then we'll have confirmation.
Okay, so stay tuned, Tyan. Sorry, I forgot. I just said your name wrong. So stay tuned and stay quite close to Janine, and she'll be able to tell you what's going to happen. But just send emails through to the email address that I gave you as a student, and we'll be able to give you a little bit more. But the next email we have is from Human, who says, hopefully I said that right. "Hello, Janine and Dale. Thanks for a great show. I've been learning so much from you guys, but I wish I'd known about you a few years back. I bought some Red 5 Limited for 29 cents per share, and now it is 19 cents per share. I've lost about $192 so far. Would you recommend me exiting the stock or holding on to it? Thanks for your advice and a great opportunity to learn from you, Human."
All right. Now, look, I mean, it's an interesting share, really interesting from a technical point of view.
Is that interesting, good or bad?
Interesting. So you're not going to pin me to anything
You're not
just
saying
yet.
anything.
So looking at his price, it was around 29. So that could have been in January or anywhere around here where he's bought it. It doesn't say where he's bought it, but 29 cents is around here. So it's fallen quite significantly since then. So if he had a set of rules on it, he's probably, if you were in it, you would have been out of it, basically.
I wouldn't have been in the first place.
No, because it's too volatile.
It's too illiquid and volatile.
Okay, so what's the liquidity of it then? So per week, 27 million, is it?
That's around 20 odd cents. It's not a lot.
Yeah. Okay. Yeah. So it needs to get, basically it needs to get back above 20.5 cents to have a hope of going up. That's the challenge with it. But it could, because it could just be consolidating long term. Was this a backdoor listing, perhaps?
Probably would be. I mean, the good thing that he did, he only put about $600 in. He's down about 30%. So he's down, he said, I think he's losing $190 odd. So it's about, he only put about $600 into it.
Okay.
So that was smart. It's a speculative share.
Yeah, but what you say is it doesn't matter the amount.
Correct. I just said that was smart. Some people put 10,000 into stocks like this thinking they're going to go through the roof and they'll make $1 million on it.
Yeah, okay. So he's not being greedy.
He's not being greedy. I think he's may have read something or seen something or got a tip bought in and now he's wondering what to do. And at this point in time, what would your advice be?
Look, I'm not necessarily. I'm going to reserve my judgment, like I said, until
Sit on the fence.
stocks
Come on, get off the fence.
goes above this level. So I would say, for a start, he's been great in putting this question up because he is down, and he's down below what we would normally consider a reasonable stop loss on a share. And at this point, he really needs to decide what he's willing to risk from here, given that he's already in loss. But if the stock goes through this level, then the risk is you don't know where the bottom is then.
I'd be out. Okay,
Yep.
there you go. And
Okay.
that's I'm gone off the fence. If it goes below that low, I'm saying get out. If it goes above the high, stay in.
All right, now moving on is a question from Chris. Hi guys, I'm watching ResMed. It's been going really strong recently. Would you consider it a good buy at this time, or do you think it will fill the gap from last month? What triggered that gap up, Chris? Well, there we go. The answer is I don't really know because it's not one that I've been following. So there we go.
I did know.
Have you been following it?
Yeah, I did know what the gap was, but it's. No, I can't remember what it was.
You can't remember now. It's gone.
It was my birthday last week, and I'm getting old and I keep forgetting.
Yeah.
So, and we're in COVID lockdown, so.
Yeah, that's right. That's a good excuse, isn't it?
No, that's my excuse.
But look, I mean, the fact is that the more it gaps up like that, the challenge then is that it could come back and fill the gap. And when you see these sideways moves, often stocks will come back and test them. So I would say whatever it's risen now from that point, it's probably not going to rise a hell of a lot more.
I know there's been a lot of rumours, lots of takeovers on lots of different stocks over the last month or 2 months, and that's another
I'd like
sign.
to have a show on all that, like, but you won't let me. I'll just get so excited about all of this stuff, like Sydney airports.
Yeah, we talked
congratulations, I know, to the board for actually knocking that back on its head.
So what would you like to do?
This is what should happen. Boards should be smarter about it and not be so desperate.
So we're going to do a show on takeovers.
I think we should. API, there's another one that's under takeover. Yeah. We had a takeover offer for Priceline.
Yeah, and as I said, I'm pretty sure Boral last week were looking at knocking
let's
back
do that,
one.
shall we?
So let's have a look at that. But it's a sign of what the market's doing right now. So ResMed, what do you think it's going to do?
Like I said, I don't think there's too much more in it at this point. There could be a little bit more upside, but after that, I think it's more likely just to soften off.
Okay, so is it a good buy right now, or is it not the opposite?
Well, I would not be buying it. If that was me and my money, I would not be buying right now.
Okay, cool. You've answered the question then. Okay, the next email we have is from Stuart, who says, however, we got we've also got a similar question from Craig, as both were asking about A2 milk, and the emails were actually very similar in what they mentioned. So rather than read out both, we're just going to read out the email from Stuart, as quite frankly, his email came in first. And basically he says, hi Dale and Janine, could you please share your analysis on A2 milk? I purchased it at $7.26 as based on what I've understood from your books, I believed it was confirming a new uptrend and volume is steadily increasing. I have a stop loss set at 10%. And I'd love to hold this stock long term, but we'll need the funds for a house deposit soon. Where do you see this going in the short term, 1 to 2 months? Thanks to you and the team, Stuart.
I know exactly what you're going to say. Go up.
I know what you're going to say.
I can feel the heckles going up, and your ears are going red right now.
Put your hands over your ears, Stuart.
They're sticking out more. Did you realise that?
What are you saying?
What I'm saying is that he's trying to do something really crafty in the short term, which you don't do in the stock market, and make a bet. It's basically what is happening here, and it's very high risk to do this at such short term without proper knowledge, and also risking something that's seriously important. You've got to ask yourself, mate, what happens if this happens? What happens if that happens? And be really prepared for anything.
Yeah, he's trying to make money out of the money he's got put aside for the house.
But look, I think it's a great question, and really I thank you for adding this to the show, because it's a really important point, because I've seen emails from people. We had an email on the show once where a girl had actually risked her education money that her parents had given her. Remember that?
I remember that. That's
that's sad. Like, I just thought, well, okay,
Rule number one, never, ever, 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 ever put money at risk that you need to purchase a property or something like that. So never do it. That's what Janine's saying. So there's my slap.
Especially if you've already signed a contract.
Yeah, especially if you've signed the contract. So you have a huge slap on the wrist from Janine and I, because well, it is. It's just not necessarily the wise thing to do. So right now, if you do need that money in 1 to 2 months, there would be no question in my mind I'd have it in the bank.
All right, now, let's have a look at what we think the stock's going to do.
Yep.
There are two people here, Stuart and Craig, that we want to help.
We need to look at it, yep.
Here we're looking at the fact that it's risen quite strongly over recent weeks.
Yep.
It did cross a trend line on the weekly chart.
But it hasn't
we haven't
proven
drawn
to
it
stop
there.
falling yet either.
No, and that's the risk with it. It's actually starting to look a bit better on the monthly chart with this move up, this current month. We did have a gap on the weekly chart. It is looking like it might come back down a bit. So, and their stop losses, it's good that they've actually got stop losses in place.
It is. They're both using different stop losses.
Yep. So the first person who was in that email had a buy price of $7.26.
They both bought. Both
Very
of them were
close
buying
together.
on the rules in my book, from what I've.
One was at 10% stop and the other 15.
Yeah, but both of them bought at least 3 weeks later than what the actual trigger was from the rules in my book.
Okay.
At least. So they bought in way too late.
Right.
They should have been buying in around the sort of mid $600.
I thought it was 2 weeks away from where you said it in your book.
No,
anyway.
about 3. When I drew a trend line on them earlier today, and I went, wow, you're sort of 3 to 4 weeks later than what you should be.
Well, look, there's a 10%, and that's just skill in developing skill with drawing trend lines,
correct.
isn't it, really?
Totally, I agree with you.
And
100%.
you don't know what you don't know. So, look, the first stop loss is 10%, which, don't hold me to this, but it's approximately there, right?
Yep.
Around that. I didn't want to mention a price because it's up to the individual to set whatever their price is. And the second one, looking at the chart, that's physically where it sits roughly as well. So you need to actually have a physical price, which they probably do if they've worked out their, looked at the buy price, said, okay, my stop loss is 10%. I'm going to exit 1 cent below that if that's my trigger, right? Or it could be some specific rule other than that actually helps them get out as well. But I just think that there's real high probability for the stock to come back into that zone right now.
Can I say something before we go? I'm going to open this up to a chart. Now, if you look at this, sorry, I'll just bring it up a bit. See, there's your low there. And we've had 1, 2, 3, 4, 5, 6, 7, 8 weeks up. This is where they bought roughly.
Yep.
Okay. If I go back on this chart, tell me where you can start seeing a time where it went up for 8 weeks without falling away.
No, it hasn't as part of that decline. So it does look good.
It does look good right now, but look, even 1, 2, 3, 4, 5, 6 weeks up here. So we're still going right back. We still haven't seen a period where he's probably more likely closer to 8 weeks. But we have to go back a fair way before we start seeing a period of time, which is
What
back
are you trying to say?
I'm trying to say is when you just because it's crossed a trend line is great, but buying in here, you know it's got to come down. The stocks just don't go straight up. So if it's 8 weeks up, you know it's going to come down. So
actually, never say never because I have, we've waited for a pullback on some stocks and we didn't get it.
But that's rare. So what I'm saying is this is normal. So they shouldn't need to panic necessarily. That's what I'm saying is it's normal for the stock to come back for 1 or 2 to 4 weeks after rising for 6, 7, 8 weeks.
Yeah.
So it's normal. All we're saying is with Stuart, he shouldn't have, if he needs to settle on a house, then put the money in the bank.
He needs to make his decision.
Yeah,
right?
he needs to make his decision.
And look at the risk that he's taking and decide about that risk himself.
Yeah, whereas to me, if that was off the table and that wasn't a part of the equation, we'd be saying just stay with your stop losses.
Yeah, because they've got a plan.
Cool.
All right, now we have a question from Lanny. Hi Dale and Janine, I would like your opinion on Nuix Limited. I bought it based on a subscription newsletter recommendation back in January 2021 at $9.90. I'm down by 75%. As current price is around $2.50, my newsletter updated their recommendation to a sell recently, but I didn't sell it, and I'm actually thinking of buying more at the current price or lower. As a contrarian, I would appreciate your analysis on Nuix and whether or not it is wise to buy more for a long-term hold. Thank you, Lanny. Really tough position, isn't it? Because on the one hand, you've got a sort of an industry mentality here which is coming through saying buy more when the price falls.
Yeah.
Which we don't subscribe to at all. I think it's massive high risk doing that sort of thing because that's all the basis of dollar cost averaging. And I was watching people, doing this during the GFC and saying, hey, you're crazy. Why are you doing that? And that's what the industry was encouraging them to do. Just keep going, keep going. It's like you're on a roulette wheel here, really not, something that you want to do with your life savings. So, but with Nuix, he's got a small purchase. It has fallen 75%. The fact that it's fallen where it has and now to me looks like it might be finding support where it is off that bottom. It's early days yet. I know you looked at me, you gave me a look, but it could.
It wasn't a dirty look, it was a look of concern.
Okay,
Only a mild look.
So first of all, we need to see this stock get above this high here. So 287, it needs to get above there for a start. That's really important. So it's a question of, if you've got stocks in your portfolio, let's talk about it from a general point of view, not specifically to his question with Nuix, but if people are holding stocks in their portfolio and they've fallen massively, what do? Do they just decide one day, okay, I'm going to sweep out the cobwebs and clean them all out and sell them? Or do they just sit back and say, I'll send an email in to Dale and Janine? Or do they say, well, I'm in it now, I may as well just keep holding it because it's fallen so far? What would you say to people?
Well, to me, it's you never ever add more, buy more on the position that you're losing on. You're losing 75%, so I wouldn't add any more to that at all. It's just not smart to do that because you just don't know whether this stock's got further to fall. Now, because when a stock will fall 75%, that's huge. So it's likely to fall even further than that at this point in time until it tells us it's not doing it. But this is a prime example of why you should use a stop loss on a stock, because if he'd used a stop loss, if you look at the screen, he would have been out somewhere around about $8.40. And right now he'd have money in the bank. But
that's all great for him in hindsight.
In hindsight, it's great.
He doesn't know that. But look, if I see this stock go above that high there of 270 for a start, I think there's potential for it to have some sort of recovery.
But how much? Buy more of it?
No.
No, I wouldn't either. No. Because you're just adding fuel to the fire in case it does just go up. Because we've seen stocks, like we looked at A2 Milk a bit earlier, it went up for a bit and then it's turned over and come down again. So you could be buying in only to find it falls away again. So that's why
we've also really in the past, long time ago, talked to people about portfolios in construction, and if they've had really small parcels in their portfolio, get rid of it because it's not helping. But we've also said, well, what's the point in selling it right now, given it's fallen so far already?
This could go sideways for the next 2 years, couldn't it?
Do you want to just let it see if it goes through that high? That's really the question. So I guess it's really back to you, Lenny, to decide, whether you want to risk any more of your capital or whether you're wanting to see what it does over the coming months.
Okay, moving on, we have a question from Chris who says, hi, Dale and Janine, I purchased $2,500 worth of Australian Foundation Investment Company shares in April 20 for $5.59. So far, so good. As a growth investor focusing on innovation, disruptive tech, fintech, across ASX and other markets, does holding a listed investment company like AFI make sense to balance out a portfolio, or am I better off owning an ETF with similar holdings, focusing on growth over dividends? I don't intend to significantly add to this position over the next 10 to 20 years. Currently 5% of my portfolio, and worry that any returns may be insignificant unless I regularly add to this position. Any thoughts would be greatly appreciated. Thank you for your continued support and efforts to educate the ASX community. Chris, you can handle this one.
Look, I think we both contribute to it so that we can help here and give a different perspective. So, I've got nothing against the stock that he's got or the company, the investment company that he's picked. Sometimes people think that that's a way out of picking stocks, just to pick an investment company, which I disagree with strongly, because these things can fall just like a stock, as we saw here. We saw a fall of nearly 50% there back in the GFC, and then with the COVID pullback, it fell back just, significantly almost as the market, maybe a little bit less than the market, before it then rebounded, and it's more or less done what the market's done, through that high, pulling up. It looks nice right now. There's nothing wrong with it, and I wouldn't be moving it out of a portfolio if I'd already had it in there.
But I wouldn't be adding to it over a period of 10 to 20 years.
He didn't say he said he wasn't going to.
He was thinking about that, but he was worried about it not adding to the returns much. If you're already worried about it, then don't do it. It's as simple. Yeah,
it is. But it's in a really nice trend anyway, so at the moment I like it. But, a nice trend line, a good set of rules on that stock could be important for managing the move up.
But I'm not a big ETF fan either, so...
So what he's asking is, do I swap this sort of thing with an ETF? I know you're not an ETF fan, but there is a place for some ETFs if you're wanting to have a mining exposure or banking exposure and you don't want to hold lots of individual banks.
I'm more against index sort of ETFs, not specific, but specific ones anyway. But, well, that's our thoughts on AFI, Janine, and I must say it's good to have you back.
Well, thank you very much. That's very nice. It's good to be back.
I know, I missed you last week. But we've been, and helping, look, you've been great helping me answer questions tonight, so thank you to all of those who
missed me picking on you, didn't you?
You did.
I do all the time.
You pick on me all the time. Remember, this is your show and Janine and I are here to help you. So also remember that the teacher only opens the door. It is the student that must walk through it. We do hope we have given you some more great insights and understanding that gives you more confidence to walk through the door and progress further along with your journey to stay safe and get better results in the market.
Now, if you're sitting there thinking, I have a question for the team, may I say that there is a vast difference between thinking and doing, and so come on, I urge you to do something for yourself and first subscribe to our channel, then send an email in to myself and Dale. We can help you. It doesn't need to be word perfect, and again, I want to remind everyone, we currently only answer email questions, so if you post it, they're happy to chat and spend some time with you.
Okay, well, Janine, that's it for tonight's show. We hope you not only enjoyed what we presented tonight, but got a lot of value from our answers to your questions. So now it's your turn to help us, and right now, hit that subscribe button to say thank you to the team who put in a big effort to bring you this show each and every single week.
Also answered on, you must do so before 3 p.m. on the day of the show, and we can hear that beautiful rain.
Great rain.